All right, and since it is noon, we can get things started. My name is Jasper with ScoreMate. I'm joined by Larry LaPlante, one of our mentors, for today's presentation on financial best practices. And I want to thank everyone for joining us. If you didn't already know, SCORE is a business resource partner of the Small Business Administration, and we help clients from all stages of the business cycle, from pre-start to exit. I do want to thank today's sponsor, which is, I believe, yes, the Maine Technology Institute, one of our favorite groups to work with. Uh, they're, an interesting group that fund, technology-related businesses in Maine, and we really appreciate their support. We do look forward to responding to your questions as they arise. Feel free to either queue them up in the chat, or as we roll along, you can utilize the raise hand function in the React window and come off of mute. Otherwise, Larry, why don't you take it away?
Thank you, Jasper. My name is Larry LaPlante. I'm a SCORE mentor. I've been a SCORE mentor for about 8 years. And in my work life, I am a retired CPA. I worked in public accounting where I did tax returns, financial statements, financial audits, and things for many small businesses. I spent over 20 years as the controller and then chief financial officer for a small investor-owned electric utility in Maine. And then I spent the last few years of my career as the director of finance for a community college in Maine. And in the meantime, I did teach some college accounting and finance courses for a couple of higher ed institutions in the state. So I've done a little bit over my career. And if we talk about financial best practices, these are things that I have seen throughout my 43 plus year career. If you research some of these online, you're going to see some of the same topics, but you're also going to see some different ones. I mean, there is no list. I mean, everything that you research and look at, they're all for your benefit. But these are some of the things that I've seen over, as I said, my career, and compose this list of areas to talk about. Again, I think best practices increase the likelihood of survival. Most small businesses, you have so many things you have to contend with. But I think if you pay attention to some of these practices on the finance side of your business activities, it will help you with the survival of your business. And it's difficult out there. I realize that. And sometimes there are a lot of things that you can't control, the economy, political decisions and things of that nature. But if you pay attention to these things in your day-to-day operations, I think it'll help you. First thing I always suggest to when I counsel a new mentor, and I've seen it throughout my career, is you need to build a team. And you need to build this team fairly early and during your development of your business, and also as you move forward through the various stages of your business activity. And part of this is to have the professionals on board to give you good advice, because I believe that good advice leads to good results. Most people, when they start a business, they're investing, say, in new equipment and things of that nature. I think you also need to invest in professionals. Certainly not perhaps day one, but fairly soon in the development of your new business. So I would suggest that you find a good accountant or tax advisor to do help with your tax work. And if you need financial statements at any point in the development of your business, you should contact someone sooner rather than later, especially in the startup of a new business. Sometimes uh, the owner may have a spouse or significant other that have other sources of income. To have a good tax advisor on board, there may be some tax planning opportunities that you should take advantage of. And so unless that individual knows that of your complete tax situation, they can assist you in coming up with some strategies that might mitigate some of your tax implications, and also perhaps help with your cash flow. The other, person I think one should, you know, develop a relationship with sooner is an attorney. Good attorney will help you with your organizational filings. For example, I mean, most people, especially new small businesses, look to form a limited liability company, an LLC. And again, the filings and those things are fairly easy, but you should have, but you still have to maintain those filings on an annual basis. An attorney will help you with those filings, but also I think it's important that you should have a review of your personal situation. You know, there may be some assets that you want to protect. There may be some assets that a spouse or domestic partner has. And unless someone does that legal review, you may have some exposure there. I know the limited liability company or any corporation that you establish does have some corporate protections, but that may not be enough. So I think it's wise to have an attorney look at your personal situation, and perhaps, you can discuss other protections that may be available to you. You certainly would need an attorney to look at any contracts and agreements. I mean, sometimes, if for example if you're a franchise and you have franchise documents, you certainly would want an attorney to look at those because they can be complex, and you need to know what your rights are, and as well as the franchise provider. The other thing would be, for example, lease agreements. Some of the lease agreements can be onerous, what types of responsibilities the tenant has versus the lessor. Okay. And so there are many different types of lease arrangements out there. And when you say, well, I've got a net lease arrangement, what does that mean? Who's responsible for payment of the property taxes? Who's responsible for payments of certain utilities, things of that nature? So if you're unsure, it would behoove you to contact an attorney to have a look at those documents. I also would point out that you really need to have a good insurance agent working with you to identify the risks that you may have in your business. It's not, for example, property and casualty. We all know about the slips and falls that seem to happen, especially every winter. And so consequently, you want to make sure you have the appropriate coverage for the business and for the property, whether you own or lease. Okay. So again, an agent would help you with that regard. For example, vehicle insurance, if you're doing deliveries, do I have the proper coverage for a vehicle? If you're hiring someone to do your vehicles, are there exposures that you have by the fact that this person is working for you, even though they have their own policies? In this litigious society, everybody's looking for someone to share the responsibility. So you need to know, if you have the coverage for that. And of course, workers' comp is critical because of the classification of your employees, and that person can help you with that, as well as employee benefits. As your business grow, there may be some benefits that you want to offer yourself and employees, so you need to have someone who's able to help you with that. I point out these various parties in my encouragement to have some of these people in place sooner rather than later. I find, and over the course of my career, that sometimes it's a lot more expensive to have one of these parties come in and correct a problem that wasn't handled, the way it should have been up front. The time you pay for fines, penalties, and things of that nature, it's a lot more expensive to have it done after the fact than if you spent the time and the investment up front to take care of that particular issue. Okay. So again, that's based on my experience. So I encourage you to have these individuals as part of your team. And that way you have someone that if you have an issue, they can respond to you rather than trying to pick up the phone book and dealing with someone right then. They're familiar with your business, they're familiar with you, and it helps to have these people as part of your team. The other members of your team, of course, are the employees that you hire. So it behooves you to develop and or hire trusted, qualified employees. And I would add to that, perhaps contractors that you may have to hire from time to time. Okay. When you do these, when you hire these individuals, I think it's important to have, as much as you can, specific job responsibilities. So it's clear to the new hire, or as you go forward in your business, if they change, you know, responsibilities, that they know specifically of what they're doing and what the expectations are. I find that in situations where those things are kind of loosely identified and maybe all verbal, it leads to confusion. And then when there is a performance issue, if you will, it's difficult to say, well, you were supposed to do this. Well, you told me to do this one day and something else the next day. But if it's in writing and it's specific, then it helps with that. And I think if you talk to a human resource professional, they would be talking to you about developing job descriptions and things of that nature. So that's something that you should do, fairly soon after starting up your business and as you start to hire employees. I think it's important to ascertain the education and work experience required for the specific job. Uh, I've seen situations where someone hired an individual thinking that they had the educational qualifications for a particular position, and unfortunately they didn't. Or they hired someone and really didn't do their due diligence in making sure that they had the quote unquote experience that they had on their job application. I mean, that's due diligence that it should be done. Now, I understand people get busy and maybe you're a little more trustworthy than others, but I think if you don't do that, you don't look at their educational background, if you don't look at their work experience, it becomes difficult down the road because if they can't do the work, then you have to replace them. And you've spent time and money with an individual that wasn't qualified to begin with. For example, I used to see this with some of my clients who would hire accounting slash bookkeeping help, and they thought they had, or they were told that they had the experience and found that they didn't. And then consequently, you had to correct some of their mistakes, which was again more expensive. Um, and in this day and age, if you hire, for example, if you were trying to develop a ordering system online, well, you'd want to make sure that the person that you hire or persons that you hired had the capability of doing that. Okay, because it does take a certain skill set, and if the person doesn't have that skill set, again, it's time and money that you may have could be spent more wisely on another candidate or going directly to another firm, things of that nature. So I think it's important that one realizes you need to spend time looking at the job requirements regarding education and work experience. And I think a key step here in building a team as you develop team members, as you develop a trust in these team members, knowing what work they can do, then it's important to delegate responsibilities subject to supervision. Most small business owners, if you talk to them, they never have any time because they're doing it all, and that's not a good thing for them. They have to at some point in time realize their value to the firm is in their quote unquote big ideas, right? The things that they need to strategize and develop new products and services and things of that nature, and they can't be doing more routine day-to-day activities. So if you're again looking at skill set, you wouldn't hire a skill set for a person who's got, if you will, management responsibilities to, for example, prepare payroll checks. Okay. There are people, there are services that can do that for you. So you need to delegate some of those activities so long as you're in tune to what's going on and you can supervise those either employees or contractors. And the other thing is important, especially in small businesses, because you do have people that leave, you have people who are out sick, who are on vacation, that you have some cross training. So that way, when someone is not at their doing their job, someone else can step in and do it for them. Okay. So I think it's important to go and develop uh, that mindset with your staff so that they can step in to do certain jobs when someone else is absent. Okay, one of the things that I always press upon my new score clients is you need to keep your business activities separate from your personal activities. I know everybody, especially if they've been in business for a while and they've had some activity, and they kind of look at everything as yours. It's mine, and certainly it is. Okay, but it becomes a little more difficult if you're constantly cutting checks for personal expenses out of your business checking accounts. So I always suggest and strongly advise that you keep the business activities and you pay for business bills out of personal business checking accounts and your personal bills and so forth out of your personal checking accounts. I also suggest that they have separate credit cards. You can have a credit card for your business, okay? And so consequently, when someone calls in and you need to, for example, order something and they're asking for a credit card, you can give them the credit card for the business. And so consequently, you keep that separation because they're going to invoice, the business separately. You can pay them, direct payment from your business checking account and things of that nature. I think it's also important if you require loans for the business, you put them in the business name. Even if the financial institution or bank wants a personal guarantee from you, keep the business loans in the business name. Along those lines, I see a lot of businesses over the course of time that there will be loans between the business and their owners and from the business to the owners. And the critical element there is to make sure that you document those loans. It's not uncommon, for example, and we'll talk about this in a little bit, where because of cash flow needs, the business may require some additional cash, and the owner has that cash, and they can make a short-term loan to the business, and vice versa. The business has had some funds, and the owner, for whatever reason, needs a short-term loan. And it happens. But the key thing is to document those loans. Actually prepare and execute a loan document, a note. And just like if you were borrowing it from an outside party, you document it, you state a rate of interest, and those rates are prescribed by the U.S. Treasury and the Internal Revenue Service. So you can go online and find out what the current rates are. And it usually is segregated by period. So a 3-month period or a 6-month period, you can find a rate. By the way, you should pay interest, whether it's interest back to the business or to the owner, to make it look like a critical loan document. And one of the things that I've learned over the years is that again, put in due dates, put in payment terms. Okay, so it does look like a straight loan. One of the issues that comes up with businesses in time is that the loans do occur. And I've had situations where, let's say it's with a S corporation or a C corporation where the owners are officers of the company and receive compensation in the form of a salary. And especially with C corporations, there may be uh, dividends paid to the owner officers. Um, so it becomes critical if it's a distribution that's made from the business to the owner and it's not documented, the Internal Revenue Service can construe that as being additional compensation, which means that payroll taxes were not paid on the date of payment, which creates some issues. And also, if it's not documented, and it's in the case of a C corporation, and there's sufficient retained earnings, it may be construed as a dividend. So the key thing is to make sure you document that in fact it's a loan. So that eliminates any potential of issues with a payment from an owner, from a business to an owner, that can be construed as compensation or dividend. Uh, the other thing that comes up from time to time is capitalization in the business. And this is one of those areas that financial institutions are always looking for, is the owner, leaving funds in the business for future needs. And so consequently, you may need, from time to time, you may need to make a capital infusion. The owner may have to put more money into the business. And so consequently, it may mean that you have to have a new stock issuance, especially during times when there's a growth strategy involved and you can't borrow all the funds that you need through a traditional loan from a bank or a financial institution. So the owners may have to provide some additional capital, if you will, uh, to fund the project, let's say. But the key thing is, if it is a loan, there is payment back into the company, then you call it either a loan and document it, or you in fact issue stock, new stock issuance to the owner or owners, as the case may be. So are there any questions so far? Maybe a good time to just pause for a couple of minutes and see if there are any questions.
We don't have anything in the chat yet, but oh, Amy, go ahead.
Yeah, I didn't put them in the chat because I have two questions and they're kind of long. Um, and I can turn my video on if anyway, I just got my LLC set up in Maine. I'd been practicing as a sole proprietor in Texas. And so I was changing everything over to my new company, and I was not set up. I couldn't get my business checking account because state of Maine delayed on getting me my numbers and my registration and all of that. So I couldn't get my checking account set up with the bank, and I couldn't get my credit card set up with the bank. And I needed to pay a general contractor for tree work at one of the properties that I am project manager on. And so I paid him $8,800 out of my personal account, and I have not charged back to the client yet. So I don't know how all of that transaction needs to go where I invoice the client for that. And I have a business score mentor, and he has suggested that I also need to add on something like 25% on top of the tree work for the project management of that part of the job. So I don't know how to do all of that to bill my client for it, and then how to pay my checking account, my personal checking account. And now I do have my business account set up. So that's question one. And then the second question is, I got my business credit card just as I was being flown down for a consulting project in Texas. And I I thought the credit card was working, so I thought I could put all of my expenses on that credit card. And I got down there and it wasn't working. And I was under such time deadlines working from the crack of dawn till night that I didn't have time to check on that credit card. I put everything on my personal credit card for that job. So I'm in the same situation in terms of how do I handle all of that accounting. So I do have the credit card. I need to find out why it wouldn't work. I don't know if I just didn't get it properly activated or what, but I need to get everything. I have not hired an accountant.
So first of all, you want to keep all of that information. You want to keep, a list, running list of the items that you were paying along with invoices and so on and so forth. Okay, because there are going to be, business deductions and so forth there. Okay. Now, when you talk to your tax advisor, okay, and you said you formed an LLC,
Mhm.
one of the conversations that individual will have with you is how you're going to treat the profit and loss from your LLC for income tax purposes. And one of the things that that person will talk to you about is to have that taxed to you just like as a sole proprietor. Okay. And so consequently, you would file, if you're a calendar year taxpayer, and most people are, uh, that information would, even though it's done under the business as an LLC, would be reported on your personal income tax return, let's say under Schedule C. Okay. So in that particular case, and it's going to be a timing thing, and again, that person would guide you, if you will, to what would be reported to you as an individual and what would be reported through the LLC. But it's all, if you will, associated with the business. It's just a timing situation. See what I'm saying?
Mhm.
So again, next conversation you can have with that person. Okay, they may have some other ideas. Again, there's a couple of options there. This is the way I'm looking at the scenario. Okay. So it's all going to be business related. It's a matter of how it's going to be reported on your Schedule C. Okay. So again, keep that information. And when you sit down with your tax advisor, you can review it with them. Okay. So they know. Yeah. And for example, are you intending to borrow from a financial institution to pay for some of these bills?
No,
Okay. So you're not looking for any reimbursement, if you will, from your LLC. It's all part of your business activity.
yeah.
Okay.
Well, I mean, I guess that's one of the questions that I'm not totally clear on what goes where. So I'm going to issue an invoice, say for the tree work, I'm going to issue an invoice to the trust that owns the property where I was doing that work or having that work done, and I paid the contractor. So I'm going to issue them an invoice for what I paid out of my personal account, and then do I need to put that back into my personal account. That was my own personal money. So that's okay. But is it going to end up looking like income for me when on what all I was doing was basically I was giving a loan to the client.
Well, again, it goes back to what was the official start date for your LLC?
Um,
Legally. What's the date of incorporation? I mean, you don't have to look. What I'm saying is, if the LLC was not legally formed, okay,
Not then.
it
It was
can't issue it can't issue an invoice, technically. All
okay.
right. And again, it goes back to the conversation that you have with your tax advisor. If the tax advisor suggests that you look at that the profit and loss from the LLC be reported on your individual tax return under Schedule C, like a sole proprietor, there is really no difference. It's just a matter of it's all going to show up on your personal tax return. Okay.
As
Now,
income.
as income, less expenses. Okay. So
Okay.
it's all going to be reported. Now, if your tax advisor suggests some other option, then okay, then you need to sit down with them. Okay. So it may be something you may want to look at sooner rather than later, if you will.
Yes.
Okay. And to get their guidance. Okay.
Yeah.
Does
Yep.
that make sense?
Yeah.
Because they may see some other things for you, and I don't want to, that's their role because they're representing you. So, but that would be something I would encourage you to do.
Yes.
Okay. But those are good questions. So those are the types of things that happen, in a situation where everything is moving so quickly. Okay. And you have to sit down and say, what's the ultimate outcome of this? And like I said, if you form your LLC and you end up the LLC, the income and loss from the LLC is going to be reported in your personal income tax return, there really is no difference to you. Okay. But if your tax advisor suggests another form, like for example, um, an S corp treatment, well, that's a little different, and so forth, so on and so forth. That's why you have to have a conversation with your tax advisor on that.
Okay.
Okay. There
Thank
may be
you.
some other reasons that they have that, you know, again, after they know all of your personal tax considerations. Okay.
Well, thank you.
Yeah. Right. Another key element is establish a workable accounting and reporting system. And really boils down, this reporting system is what information is needed to make decisions. Okay. And usually it's a breakdown of things such as sales, revenues by customer, product, services, etc. What do you need to know from the revenue that you're generating in your business? How you want to segregate and analyze that. It also helps with tracking spending. Okay. Determine and analyze what items are fixed versus variable expenses. And for those that aren't familiar with those terms, a fixed expense is something that occurs every month or every period. For example, rent is a classic case of a fixed expense. Okay, I pay my landlord X amount of dollars every month, every quarter, every year, whatever. That's a fixed expense. It doesn't vary with the level of activity, usually. Okay, there are some funky leases. That's why I mentioned, working with an attorney to look at these lease arrangements, because I've seen situations where the lease includes some criteria about the lease varies with, if you will, level of sales for the tenant, which is kind of crazy. But typically, most leases, it's usually for a fixed amount on a monthly basis, versus variable, which things, for example, it it varies with the level of activity. For example, I use this, say, electricity. Well, if you use a lot more electricity from month to month, it's going to show up in your billing. So that's based on level of activity. So if those things that change relative to the amount of activity you have in a particular area. But one of the things I always point out to people is that you can do a lot of analysis, but you can always be paralyzed by that analysis. Okay, you spend so much time analyzing things. You don't ask the question, what does this mean to my business? So you want to pick those things that kind of drive your business activity. And it takes time. Sometimes it takes a while to get into a situation and looking at and saying, this really does make a difference. If I sell this particular product, okay, it, it has an outcome, more desirable outcome for my business. So you need to be aware of the types of areas that you really need to focus on. The other thing is develop customer credit policies and procedures. I think this is very important. You probably, as someone who's buying products from different vendors, you see their credit policies and procedures. So you understand what their payment terms are. So you want to know what, if, for example, if you're dealing with customers, you want to understand what the standards are for your particular industry. And when we talk about terms, for example, if you're selling items on credit, usually there are prescribed discounts, if you will, if the customer pays within a certain period of time. So when you hear something like net 3, 30 days, that means that, if the customer pays within, 3 days or within, say, 10 days, they get a 3% discount. But the expectation is they'll pay the entire bill within 30 days. Okay. Another thing that crops up from time to time, especially if you're a retail operation, if, for example, people will offer a price if they pay with cash versus credit card, it may be 3 or 4%. So if you pay by credit card, you pay this price. If you pay with cash, we'll give you a discount. And again, depending on the credit card processing fees. Now, what are your competitors doing? So if you have customers that have choices as far as where they buy supplies or consume services and things of that nature, you may want to be aware of that. Define roles, policies, and procedures. So for example, who is going to make decisions as to whether you sell products to certain customers? Okay, that should be at a fairly high level. Okay, you don't want, for example, if you have a retail operation, the person that's at the counter making decisions about selling items on credit. Okay, and for example, that may be the owner or a manager who, in fact, has the authority to make those decisions. I had a lot of grocery stores that I did work for when I was in public accounting. And a lot of those stores did credit sales to large businesses. But that decision was made by the person at the cash register. I mean, that was made by a manager or an owner of the business who would offer, you know, sales on credit, subject to invoicing and things of that nature. That's an example. There are other things that one could think of where you want those decisions made at a very high level. And again, you state your terms. And again, having standards that you can provide the customer is beneficial. And if it's something that you're not familiar with, you may want to discuss with your accountant to find out what they're seeing with other types of businesses in your area, because they deal with a lot of different parties in a lot of different businesses. And so they can kind of give you an idea of what the current trend is in your particular area. All right. Along with, having this workable accounting and reporting system, it's important to know the deadlines for certain tax filings, when critical payments are due, and when legal notices are required to be sent out or filings done. So I always suggest that you have sort of a reminder system, okay? Because sometimes you can't all keep those in that cabinet, in your head. So you need to have the capability of having some type of a reminder system established so you can, make sure that certain critical things are done during specific periods. I mean, I know, for example, for example, in sales taxes, if you're subject to sales tax. Well, usually those filings and payments are usually made on a prescribed time, for your particular business. And depending on your sales activity, okay, you are prescribed, you are required to pay, and file the sales tax return and pay the taxes within that particular time period based on your volume of activity. One area that gets, is always critical are payroll tax deposits. If you have employees, you're withholding federal and state income taxes, you're withholding federal Social Security taxes and things of that nature. There are very stringent requirements as to when payments have to be made, for example, on the federal withholding taxes and Social Security taxes that you withhold from employees. So you have to pay particular uh, have particular attention to when those due dates are required. One of the issues that I've come upon in the past is, for example, a particular employee or a particular client would be paying their employees on a biweekly basis. So every 2 weeks, payroll checks are cut, payroll taxes are withheld, and then payments are made within a particular time period. And what would throw some people off is that pay period, that month that has three pay periods, and it happens over a 12-month period. If you pay every 2 weeks, you have 26 pay cycles. So two months out of the year, you're going to have a third pay period. Well, that would sometimes upset, when their prescribed payment was due. And so sometimes they would lose track of that. And then they would be subject to penalties and fines based on the fact that they unreported their payroll taxes. So those are the types of things you have to pay attention to. The other time I would run into problems with people with payroll tax deposits would be, for example, if they made bonus payments at some point during the year and forgetting that, well, when you make these quote unquote bonus payments, it's subject to payroll taxes. And they hadn't factored that into their timetable for the payment of those withheld taxes. The other recommendation is to invest in accounting software, such as QuickBooks. It was a very common tool out there that people use. And if you need help with setting up the QuickBooks, then maybe you need to have some professional help. Maybe talk to your accountant. Again, going back to the types of things that you're trying to track, revenues and expenses, that's going to be a key element of your QuickBooks setup. And if you don't want to, use a QuickBooks system, and if you know Excel, you can easily set up these schedules in Excel. Again, with maybe a little help and guidance, but you can set these up and use those for your reporting and at tax time when you have to provide your tax prepare a copy of your activities. You can certainly give them an Excel spreadsheet to work with. Okay. Management of cash flows, I think, is a critical element because survival requires sufficient cash flows at critical times. So I'm going to go through these fairly quickly because a lot of them are things that kind of build on them. For example, knowing your spending cycles. When I say spending cycles, every business has a unique cycle, if you will. When, for example, if you're a retail operation and you have to start building up your inventory for holiday sales, if that's a critical element in your business, well, you're probably going to start ordering things and paying for things to get things in the store, if you will, before the holiday seasons. And sometimes that occurs during periods of time when the cash flow may not be as robust, but you need to have the ability to order particular items that you want on your shelves. So you're going to have to think about, how do I plan that for that spending cycle? Know your customers' payment habits. Okay, again, going back to selling products where you have credit terms. Well, how do your customers handle those payment terms. I had some fast food restaurant clients back when I was in public accounting, and one of the things that they always wrestled with was the slow period of January, February, and March, because their sales were reflected because people were recovering from the holiday spending season and cold weather, so they weren't going out as much. So that impacted uh, their willingness to go out and take the family out to a fast food restaurant. And so they could count on a drop off in their revenues during that time period. So they had to plan accordingly because you still had to staff up, if you will. You still had to those expenses that you had to pay. So they had to be aware of that. Focus on critical cash expenditures, not only amounts, but critical dates. For example, and a lot of times it's, for example, loan payments. When are these loan payments due? And having available funds to take care of those. Anticipate cash shortfalls and develop a plan. We have to look at when are these, for example, spending cycles, you know, uh, periods of time when you have a lot of payments that are due, and making sure that you have sufficient cash within the business to meet these short-term needs. And if you don't have cash or don't anticipate that you're going to have cash from operations to take care of these needs, then you may have to look at securing working capital loans from a financial institution. And keep in mind when you go and get working capital loans, which are a very common form of financing, it takes time. You could probably think of a 4 to 6 months period of application and getting the information that you need to the financial institution so they can make a decision on your working capital loan. So you need to be prepared for that. And you're thinking, so you sort of have to look ahead and plan on that. You can also, and we talked about loans from the owners to the business. And so in times of cash flow shortages in the business, the owners may have some funds that they can fund, can provide to the business to fund some of these needs. Again, the critical thing is to document those loans, as we said before. And one can always use Excel spreadsheets for these cash projections. Once they're set up, and if you work with those on a regular basis, you can start, projecting what your net cash needs will be. Review financial reports monthly, but not less than quarterly. If you're getting financial reports from a QuickBooks system and they have a very robust series of reports, again, they have to be set up but they will provide you with, say, profit and loss income statements, balance sheets that you should review on a regular basis to see where you are financially. And in some cases, that the information that you get from that can be, for example, downloaded into an Excel worksheet. So you can use those for providing, preparing your cash flow statements. I'm looking at the time and I want to get to this area, which is basically evaluating and planning. Most business owners, are always thinking about ways to improve their business and ideas about uh, things that they should investigate to expand their businesses and things of that nature. Unfortunately, a lot of times they keep those ideas in their head and they don't always document those, put them in writing, and go back and look at those. So we talk about, business plans, and a lot of people do a business plan to start their business, but they're never planning going forward and actually preparing a document. It doesn't, as I said, it doesn't have to be anything that's going to be permanent, but it's something that is in the form of a planning document that they continuously upgrade and update and look at going forward. And part of it really, if you take a look at a strategic view of things, It really is looking at the broader picture. What's a realistic assessment of challenges and opportunities for your business? So kind of taking that broader view. What's the assessment of the business climate in your industry and your operating area? So if you have products and services that are feeling a crunch nationally, whether it be expanding need or diminishing demand, then you need to look at what's going on, globally for my products, and then look at your particular operating area. What's the economy like in my particular area? What are the challenges going forward, and how does my business plan coincide with what I'm seeing out there in my area? And you really have to do this on a regular basis, and what are the strengths and weaknesses of your business in meeting the challenges and or opportunities of your industry and or of the operating area. So folks who have done any type of strategic analysis in your past work lives, you know what a SWOT analysis is, and you're looking at strengths and weaknesses of your business. So even though you're a small business, you still have to look and say, what are our strengths of it as a business? And what are our weaknesses? There are things that everybody can do better. So trying to identify those. Okay. And one of the things that you have to stop and say and ask these tough questions. How are we doing? We'll go to some of the questions you have to look at. Oops, I got to back up. Oh, sorry about that. Well, sorry about that, folks. Now I'll continue on because I run into a little issue here. Anyway, when we're looking at some of the questions you have to ask people are, who are the customers and how are they happy with my products and services? What are the new products and services that I can provide to customers? What are the things they're asking of me that I might be able to fulfill for them? And who are the potential new customers? Are there other customers out there that I should talk to see if I can provide them with new products and services? And some of the strategies that um, new products that may be offered to them. And then once you've identified those opportunities, then you need to look at how do we produce these new products for them or provide them with these new services. So what type of an investment do we need to make in new equipment, new production facilities, or whatever it may be, to produce these particular goods for them? Or if it's the case of services, are there contractors that we need to partner with to provide these new services to customers? So it's an ongoing process of evaluation. Once you've evaluated, is there opportunity? And if there's an opportunity, how best do we provide these services or goods to these new customers? And from there, you start developing plans. Do we have the right people to be able to provide these services or these products? Do we have the right materials that we need to provide these new services or products? So it's an ongoing thing, but one should, should look at that as something that they should set aside time, during a work period, maybe once a week, maybe once a month, and set aside and try to think. It doesn't have to be a long period of time, but start thinking of these issues. Now, as your business develops, as you develop more trust with some of your employees or advisors, as the case may be, if it's someone outside of the organization, you should have these sessions with them as well to help with the planning and fulfillment of the goals that you have set in developing these new products and services. And last but not least, and I think one of the criticisms I've had when I looked at business plans is no one ever puts in a exit strategy for the critical owners of the business. And I think that's something one has to keep in mind. It doesn't have to be, at some point in time, who's going to continue with this business? The business should continue irregardless of who the owner is and so on and so forth. So one's always identifying potential parties that might be able to continue with the business. That's part of a long-term strategy, but I think it's something that's important to look at. So I think I've got a couple things in chat, Jasper.
Yeah, we've got one question in the chat from Susan. It's a longer one with some specific questions,
Yep.
but I think it's interesting. Susan says, my husband and I own the building we live in upstairs from our business storefront. We share utilities and taxes. We halved all the bills in our first year, but our accountant advised us the second year to pay all the bills from the personal, and at tax time, you can add it to business expenses. Would you say that's the easiest way to do this? The accountant also said they should pay themselves rent, but how would you say they should come up with that amount? And finally, should they ask their lawyer to put the building deed under the business?
Okay. A couple of things there regarding the utilities and taxes. I guess the question would be, in whose name is for example, utility bills coming to? In whose name, in whose name is the owner? And I'm assuming by the fact that you're asking an attorney to see if the building deed should be put under the business. I'm assuming the business is owned by you personally. So what I would, again, looking at that, uh, whoever's name the utility bills, for example, or the tax bills are coming, then the business can reimburse you for their share of those expenses. Okay. Which is basically what your accountant is advising. Okay. Because again, if you as individuals are receiving the bills, and the business is going to reimburse you for those, okay, or their share of those. And I think that's still the easiest way of doing it. And the accountant advises to pay rent, and I think that's probably also a good strategy, because if you are in fact the owners of the building, then the space has value, and I think you should pay yourself, even though for tax purposes it may not have a lot of significance from a personal income tax standpoint, because it's rental income to you. But from a business perspective, if you were paying another landlord rent, that rent would be a business expense, and therefore would reduce perhaps your business income and loss that would be taken in consideration for self-employment tax. So that's something that would be a reasonable solution for you.
Great. Yeah, I think that's some great advice on that one. We do have a minute left if anyone has any other questions.
And I apologize for losing that PowerPoint, but
All good. It happens. But in the meantime, if there was any information on that, some slides that we may have missed, or we will be sending that out to those who have registered, as well as the recording once it is available. Like I said, if there's any other questions, feel free to queue them up, and I'll continue my little spiel here. I do want to thank everyone for attending. We will, like I said, we'll be sending out the slides and the recording. We will also be sending out a brief online survey that we really appreciate you filling out. We look at them all and take your feedback into account. And one more plug for SCORE. As a reminder, SCORE Maine offers free, confidential, one-on-one mentoring, whether you're starting or growing your business. It's very easy to request a meeting with a mentor by visiting score.org if you don't have one already. Just enter your zip code and fill out a brief online form. And once more, SCORE is a nonprofit partner of the SBA, and we're located across the country. We have 3 chapters right here in Maine. And our numbers are in. We helped start over 560 new businesses last year alone. So if you haven't already gotten started and you don't already have a mentor, feel free to head to score.org and submit a request. Well, if it looks like there's no other questions, I believe we can wrap things up today. Thanks again, everyone, for attending. And I want to thank Larry for putting on a great presentation.
Thank you. Enjoyed it. Have a good day, folks. Enjoy the great weather.
Yeah, you too. Thank you.